Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that you are enjoying our early morning briefing. We are live, 7 a.m. Eastern, every Monday. If you are viewing this podcast on our reports and are up at 7 a.m. Eastern, please tune in next week live. It goes without saying, but I'm going to say it anyways. Please like us and follow us and pass on the good word. We certainly would like to build our customer base and appreciate it. Our weekly quote this week from people that we believe are really smart is from Henry Ford. We all know who Henry Ford is, and we have used his quotes before. What a great man he was for America, and someone that we look up to here at PFL. I myself drive an F-150 pickup and am proud to do so. What a great truck. Henry Ford once said, paying attention to simple little things that most men neglect makes a few men rich. We really like this one, folks. We try at PFL to do that, especially as it relates to customer service. We like to do the little things like keeping you informed of the markets as we see them and provide reports, this podcast, and other customer service efforts. If there is a little thing that we are not doing for you at PFL, please let us know. We'd certainly appreciate the feedback and are eager to change and please. The U.S. Labor Department stated on Thursday of last week that U.S. workers filed an additional 860,000 initial jobless claims. Initial jobless claims are still very high and point to ongoing job losses due to COVID, a program introduced in August by the federal government called the Pandemic Employment Assistance Act has been stubbornly high as well and saw 658,737 claims last week for that program. This support program is designed for self-employed workers. The Dow closed lower on Friday, down 244 points to finish out the week at 27,657, down 8.2 points week over week. The S&P 500 traded lower, 37.54 points on Friday, closing out at 3,119.47, down 21.5 points week over week. The NASDAQ finished Friday's session lower as well, losing 116 points, closing out the week at 10,793.28, down 60 points week over week. In overnight trading, futures traded lower and are expected to open down this morning 563 points. WTI traded up on Friday to close at 41.11 of last week on the New York Mercantile Exchange, a gain of $3.82 or 10.1% per barrel week over week. U.S. crude inventories decreased by roughly 4.4 million barrels last week and now stand at 496 million barrels, according to the EEI. Consensus was for a 1.5 million barrel draw. Hurricane Sally impacted last week's numbers, taking roughly 500,000 barrels a day of crude production offline. Gas inventories were down by 381,000 barrels. Distillates had a build of 3.46 million barrels. Oil is lower in overnight trading, and as of the writing of this report, WTI is poised to open at 40.27, down 84 points per barrel from Friday's close. Total North American rail volumes were down by 9.2% year over year in week 37, resulting in quarter-to-date volumes that are down 6.9% and year-to-date volumes that are down 10.5%. 9 of AAR's 11 major traffic categories posted year-over-year decreases, with the largest decreases coming from intermodal, coal at 23.4%, and non-metallic minerals down 20.6%. Largest increases came from grain and farm products. The big surge in intermodal traffic seems to have waned week over week, a leading contributor factor to last week's declines. Let's hope this was a Labor Day blip. Other items that we are watching: biofuels. Ethanol is looking interesting, and so is biodiesel, and could be a tailwind for rail in the days to come. President Donald Trump said he would support a plan that would allow fuel retailers to sell 15% ethanol blends in pumps that already accept E10 blends, subject to individual state approval. In addition, Brazil extended by 90 days its quota for allowing some tariff-free U.S. ethanol into the country. This is good news for exports. Also, the EPA on Monday of last week said it denied more than 50 requests for retroactive small refinery exemptions known as SREs, standard compliance requirements. At the end of the day, these refineries must either blend biofuels when they sell gasoline, diesel, or heating oil, or buy RINs for not being able to or having the infrastructure to blend. The battle is not over as it relates to small refinery exemptions. Refiners HollyFrontier and CVR Energy asked the U.S. Supreme Court this month to review the ruling that they said improperly declared the eventual extinction of the SREs and would force small refineries out of business. It is anticipated that the short to medium term demand for biofuels will increase since most biofuels move on rail. Good news for rail and bad news for struggling refineries. The reality is, longer term, both big oil and the renewable fuels industry, as it relates to fuels that we consume in our vehicle, does face significant headwinds in the future, as the far left has an electricity for everything agenda. Petroleum by rail. The 4-week rolling average of the petroleum carried on the largest North American railroads fell to 21,172 compared to 21,231 the prior week. Canadian volumes fell. CP shipments fell by 9.8% and CN volumes fell by 12%. At a JP Morgan's industrial conference last week, CP said its crude by rail volumes most likely hit bottom in the third quarter and are expected to rebound moving forward. Take-or-pay contracts have offset top-line revenue declines. Once the Diluent Recovery Unit, known as a DRU, being built by Gibson and USD comes online in Hardisty, Alberta in the first half of 2021, CP expects its volumes to pick up significantly as transportation costs for the concentrated bitumen become competitive with pipelines that require condensate to move crude oil through a pipeline. We're watching Alberta. Canadian heavy basis closed at minus 10.75 per barrel on Friday of last week, according to the International Energy Agency. Canadian oil supply rose by 130,000 barrels a day during the month of August. PFL expects more supply to start hitting the system sooner rather than later. A fire at Suncor's base plant stunted production recovery during the month of August, but oil output has been restored to 165,000 barrels per day with full production of 300,000 barrels per day expected sometime in November. Imperial Oil is ramping up its 240,000 barrel per day Kearl oil sands mining operation, as Interpipeline announced last week in a media statement that it restored services to its Polaris pipeline system. The Polaris diluent pipeline was taken offline following a diluent leak on August 29th. The pipeline's partial closure was triggered by a diluent leak east of the Fort McMurray Airport. The diluent, which is mostly condensate, is blended with the heavy oil sands to prepare the crude for pipeline transport and affected Imperial Oil's operations. Fundamentally, one would think that basis continues to weaken as more production hits the system, leading to more crude by rail volume in the not so distant future, assuming prices for WTI hold steady and move higher. Right now, the forward curve, albeit marginal, does not look too bad. Stay tuned for PFL and future developments. We're watching Dakota Access, DAPL. Folks, it looks like DAPL is safe until the end of the year. The 570,000 per barrel per day pipeline has been in front of courts for quite some time, and an updated court schedule will keep the pipeline in service at least until the end of the year and after the November elections. DAPL has been operating since 2017, is facing a new set of environmental challenges. The pipeline is in front of U.S. courts, and Judge James Bosenberg will hear briefings through December 18th. The Standing Rock Sioux Tribe and others want the pipeline shut down. A decision to shut in the pipeline would have ravaging effects on farmers, North Dakota, and shippers that would be seeking new ways to ship crude, which could mean increased crude by rail out of the Bakken. We're watching hurricanes, folks. We're keeping a close eye on hurricanes all around. What more can 2020 bring? Well, we've been through the alphabet as it relates to named storms, and we still have 9+ weeks to go of hurricane season. The Atlantic hurricane season officially starts on June 1st and runs until November 30th. While Sally was ripping apart Alabama, Florida, and parts of Georgia, Hurricane Beta, now Tropical Storm Beta, was forming in the Gulf just off the coast of Mexico and Texas. It is unclear at this point how much production has been effective in preparations for a much larger storm, but Beta has its eyes on Texas in between Houston and Corpus, which certainly will have an impact on U.S. exports. While Hurricane Teddy in the Atlantic has its eyes on eastern Canada and is expected to land as a Cat 1 hurricane, a rare event for Canada. As far as North American rig count last week, well, we're up 13 rigs week over week. The U.S. gained 1 week over week with 255 active rigs. Canada gained 13 rigs week over week, and Canada's overall rig count is now at 64 active rigs. Year over year, we are down 668 rigs collectively. In the week to come, well, this week is all eyes are on the death of liberal Supreme Justice Ruth Bader Ginsburg that occurred on Friday. This is going to be a fierce battle. Democrats and Republicans with President Trump to soon announce a woman replacement. And the Democrats want no part of it. Buckle your seatbelt, folks. We're in for a ride. Well, that's all for this week's podcast. We hope that you have a great, safe week, and we will see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885. Thank you.